Hey, welcome to Stocks, Tech, and Beer. Here we talk about the hottest trends in technology in the stock market while enjoying a cold one. And it doesn't have to be a beer. I'm breaking the rules in the second video already. Drinking some Jim Beam double barreled bourbon tonight. Why? Two reasons. One, just drove through Kentucky, and when in Rome, you stop and buy some bourbon. And two, I was out of beer after the last taping went wrong, and the ones I bought weren't cold. So here we are. And today's topic is it's a little confusing. Probably needs a stiff drink to make any sense. And the topic is why is the stock market so high while the economy is in the crapper? First off, let's not conflate the stock market with the U.S. economic market. These are two very different things, and they don't always move in the same direction. In fact, it's fairly common you see them move in different directions. It's just the way it works. There's no reason for it. You might hear a dog barking in the background. I'm outside at a farm in Indiana now, and there's three large white dogs roaming the grounds. And they were up here just a little bit ago. I had to wait and pretend to be boring to get them to go away. So hopefully they don't come back up here for the rest of this taping. But you might hear them in the background. But anyways, let's get back on topic, and that's why is the stock market up? And I think it really comes down to two things. Number one being the initial fall was really just a complete overreaction. An example of that is just the other day I was listening to an interview with Jeremy Siegel. You know, the stocks for the long run guy, smart dude. He's a professor at some prestigious college, and the guy brought up a good point. If a company made absolutely zero profits in 1 year, this year, how much should it impact its valuation? Now these smart guys run their valuation models. Do you think it would bring the stocks down 10, 20, 50%? Well, the answer is 5%, only 5%, but the market dropped well over 30%. So it's a complete overreaction. Some of these companies should have gone down that far. You got a company like Carnival Cruises who's shut down, and I don't know anyone who would want to take a cruise in this and be potentially exposed to the COVID-19 pandemic. One person has it on a cruise ship. Almost all of them are going to get it, the circulated air and everything. But Carnival has a lot of debt, and with that comes a lot of interest payments. And they don't have a huge cash position, so they could potentially have some liquidity issues. And if that happens, they go through a bankruptcy restructuring, and usually the stock price goes to zero. So in that regards, it kind of makes sense. Now, most companies don't have this problem, especially the FANG stocks, Facebook, Amazon, Apple, Netflix, and Google. And if you throw in Microsoft and Tesla, you get a good chunk of tech stocks that are huge companies, and these seven companies alone make up something like 20-25% of the S&P 500 and even more of the Nasdaq 100. So as these stocks continue soaring, it's going to push the markets up, and the pandemic's actually helped these companies find more customers. I mean, more and more people using Amazon to get things delivered because they don't want to go to the grocery store. So they log on Amazon, Whole Foods, boom, groceries delivered to your doorstep within a couple hours. It's really a big win for the consumer. It saves a bunch of time. And that's just one example. I mean, more people are using Netflix, and yeah, you guys know what all these companies do. We don't need to go through the whole big rundown. But anyways, profits are soaring for these companies, and that's moving the stocks higher. Uh, but that's a little bit of tangent from where we wanted to go. So let's get back on track. The second reason the stock market is going higher is because the economic impact isn't really being felt yet. Early on in this crisis, once the politicians realized that we were going to lock down and that's going to create a hardship on a lot of people, they passed a huge fiscal spending package at $2.2 trillion CARES Act, injected a lot of money directly into the economy. And the one thing it really did is that it gave people a lot of money in unemployment insurance, that extra $600 a week from the federal government on top of the state unemployment insurance payments. That's making people, feel rich these days. A study by the University of Chicago was done recently, and they found that about 68% of people should be receiving more money now, unemployed, with those two factors, than they were when they're actually working full time. So why are those people going back to work when they can milk that gravy train at least until October? And with more money and all the spare time, you're going to see these people spending it on vacations and just other kind of frivolous things. So you'll see companies with profits rising, even in this kind of a weird situation where the economic slowdown should be hurting these companies more. And in fact, going back to people earning more, this same study found that 1 in 5 people should be earning twice as much with the unemployment insurance than they would be if they were working full time, which is absolutely crazy. It just blows my mind. But anyways, it's this CARES Act that also gave most Americans that $1,200 stimulus check. And actually, the CARES Act, that $2.2 trillion, very few, or a small percentage of that went to the individuals. A much, much larger percentage went to corporations and special interests. I mean, there's just so much pork in this bill. I think if most people knew what was going on, they'd want to drink a little bit more. Anyways, yeah, all that money got put to work into the economy so people could, continue leading normal-ish lives and not be too disrupted and kicked out of their homes. Be able to pay the rent, feed the kids. So, this is probably a good thing considering the government forced people to lock down, and that was really the reason that many people are actually losing their jobs or being furloughed. Anyways, I don't think we'll actually see bad economic activity for the second quarter of 2020. The GDP numbers aren't out quite yet. They come out at the end of July, and I don't think they're going to be as bad as many people fear they will be. Will it still be down a little bit? Probably. Will it be down 10, 20, or 40% on an annualized basis? Nah, I don't think so. I think we'll see a single-digit drop, and I think that'll surprise some people who just have these cataclysmic inclinations for what the stock markets or the economy is doing right now. So, despite what you hear, I don't think the economy is actually bad yet. But if these government handouts do stop, or if the Fed stops injecting liquidity into the market, actually, that's a third reason why the market's up, and that's the Fed. The market bottomed out on March 23rd, and that's the same day the Fed announced their QE, quantitative easing infinity plan, where they said they'd do whatever it would take to backstop the market. And that day they started buying some junk debt, the low grade, crappy bonds of companies that are of questionable financial stature. And they just wanted to make sure that market stayed liquid, so they went in there, bought a bunch of those junk bonds, and started QE Infinity. And that liquidity that they injected is a huge part to why the market continues to go up. These companies are still able to, these crappy companies, not necessarily crappy, but, over leveraged companies, which is a lot of companies right now with the interest rates being as low as they are and debt as easy as it is to get. These companies fit into the junk debt category. And if this market ever froze up, that would be very bad for the economy and the markets as a whole. So the Fed's in there backstopping it, doing what they can, but that's going to keep pushing these stock prices up as they, um, help out the financial asset holders. Not how I would run the government, but I'm not there. It's not my ass on the line either. So I get why they're doing it. But if the politicians don't keep up this astronomical fiscal spending, it's we could see a bigger economic slowdown happen in the coming quarters. I mean, just look at the announcement last week from United Airlines. They said once they can actually fire some people after taking the PPP loans on October 1st, they're going to be firing 30,000 workers. And, that's just a microcosm of probably what's to come. And at that point, I think it could get ugly. We got a few other things we'll talk about later and what could actually bring the market down, but that's definitely a huge part of it, and that's depressing. So I'm going to sign off before I head back to the bottle for another round. So take care. Cheers.